Hello traders, the title of the video is the first step to a profitable reversal trading. First step to a profitable reversal trading. We are on a monthly chart of CF Industry Holdings Incorporation. The epic is CF, Charlie Foxtrot, and we want to talk about the first step to a profitable reversal trading. All right. Are you a reversal trader? Are you a swing trader? All right. When I started trading a few years ago, I liked so much a reversal trading. In fact, I was selling more than I was buying because a lot of traders do not know how to sell. So financial instrument has been going up for some time. It's now due for a reversal, and a lot of people do not know when the financial instrument is due for a correction. As a market participant, whether a day trader, swing trader, position trader, or an investor, you want to know when the market is due for a correction. All right. In 2008, all right, during the financial crisis, a lot of big market players, all right, get into trouble just because they couldn't understand when the market is due for reversal. Because before the market is due for correction or a reversal, there are many signs, that will appear on the chart. One example, we may see a lot of divergences. We may see that major stock indices may be in a fifth Elliott wave. We may see a lot of bad economy news that are completely disregarded by the market. So you may see, for instance, bad economy news be released, but the market continue to go up. So when you see that, you know that the market is becoming a bit insane or irrational. So they don't want to know, they want to buy, and everybody is happy. It's like they are drunk or obsessed with the bullish trend. But the market does not go up forever. Understand that the market does not go up forever. So if you are fixated in buying only, you can be in trouble. So there are traders who find it very, very difficult to sell. And they just want to buy. This is their nature. They don't know how to sell. They just want to buy. A few years ago, even though they were talking about selling is like evil. Well, I don't know about that. I see it like a season, different season. So sowing season, harvest time. So when people are selling, it's the harvest time. So talking about the first step to a profitable reversal trading. So we are not talking about bearish reversal alone. We are talking also about bullish reversal. When a financial instrument, so now bullish trader will be smiling. So this is what they want us to talk about, okay? Price going down, going down, going down. There will be a time when it will change direction. A financial instrument is not bearish forever. We have seen it for the dollar yen. A few years ago was going down. People were just selling the dollar yen non-stop. They were selling the dollar against the yen non-stop as there are money flow out of the United States into Japan, where more people are saving money in comparison to the United States. So this is due to the quantitative easing policy, monetary policy by the U.S. Federal Reserve. So depreciation, devaluation of the dollar, money coming out of the United States into Japan. So people were selling the dollar yen non-stop. Now, professionals will say they are milking it for years. But at one point, there was a reversal. So now the dollar yen is going up. It's going up now for God knows how many years, at least 4 years now. It's going up, going up, going up, going up, going up. Will it go up forever? No. As it was going down before, it won't go down forever. Now that it's going up, it will not go up forever. There are seasons and time in the market. There are cycles in the market. All right. So if anybody else is teaching you something else that the price is going up forever, it's not true. What we will say to traders that the natural progression of the market, the natural tendency of stock market, financial market is up. The market like to go up more than it wants to go down. This is true. All right. So talking about reversal, reversal will take place at the end of an uptrend or at the end of a downtrend. So what is the first step, okay, to a profitable reversal? The first step to a profitable reversal is to use what? Market geometry. Now, I've said it before, and I'm saying it again because it's so important. And there's one scenario here, one specific example here of this stock, CF Industry Holdings. This is an American stock in the basic material sector. And you can see that I draw some trend line on my chart, this one. And this one here allows me to draw my first trend line that I'm going to color now into orange, all right? This point and this point. I could have used this point and this one here, but I like these two here, okay? And then I just select one point here, and I draw a line that is parallel. I could have choose, okay, this point and this one here and this one here. With those 3 points, I will have a channel. I could have done that, okay? So when did I draw that line? Okay, after this, so my 3 points are this one. So after those 3 points were in place, I can draw my channel like this. So you may say to me, since 2010, I could have drawn this channel on my chart. Will you agree? After those 3 points are completed, I could have drawn this line since 2010. Right here, after I start changing direction here, I can draw my channel. So since 2010 up to 2016, I can leave that line, those lines on my chart. It's my chart. I can put it there and leave it there. Okay? The next thing that I will always do is to draw the median line of that channel. So once I've drawn that line since 2010, I could draw the median line of that channel. Okay? Here it is. So this is the median line of that channel. So you can see since 2010, the price pulled back, retest it here, find a support, bounce up to the top, pull back, retest it here. You see what's going on. And then find a support again on the edge of the median line, boom, up again to the edge, find a bit of resistance, pull back, breaks above the top of my channel, retest it here, and then run up 1, 2, 3. What's going on, my friend? This is now the reason why I get a bit excited of this move here, 1, 2, 3, is because the minimum price move is free. So now we are talking about reversal. Another thing, talking about the first steps to a profitable reversal trading is to understand this, that the minimum price move is free, either in an uptrend or in a downtrend. Price going up or down, the minimum, not maximum, minimum is free. So this is very interesting. So a reversal very often will take place if we see that a financial instrument goes up 1, 2, 3 from a high here after the 3 move. So how do we know the 3 move is completed? When it starts coming down a bit, then we know that it's completed. Before that, we don't know. So if it does something 1, 2, 3 and start coming down like this, we will draw a line here and we'll say minimum price move is free. If the price fails to go above that high to find a support, we will expect it to continue to go down, at least to the first support level here. And if it couldn't find a support at the first support level here, it may continue to seek the next support level here. All right. And if that one it couldn't find the support, then it's coming back to the cycle point, which is the beginning of the whole thing. All right. So the minimum price move is the first thing that we must know if we want to start trading reversal more profitably. So I talk about market geometry. Now we want to combine market geometry with, okay, the minimum price pool is free, which is a market stable data. All right. So as the price was going down from here, if there was this channel, which is the rising channel, so we will expect the price to stay inside the channel. But if it breaks above it, we will project the channel in the direction of the price. So by projecting a channel, we are now using what we call market geometry. So price goes above the channel. Let's project only half of the channel because I don't want to waste my time. So we can project the whole channel. So we measure it from the top to the lowest point. But now I want to use only the half of the channel. So we project it to the upside up. So I'm taking it piece by piece, bit by bit, instead of taking the whole channel, projecting the whole channel. I'm projecting only half of the channel. So now we draw a line that is parallel. You like that word now? You like it, my friend? Okay, so that's parallel to our first half of the channel. That's the first half, okay? So here we are. So look what's happened. So we are reversal traders. We want to know where the price is likely to change direction. So very often, my friend, if you are a reversal trader looking for more profitable reversal trading strategy, use market geometry. So now, because usually the price will stay in the channel, so it goes above it, we project it. Project half of it. It goes above it again, we project it again. The median line that had another half of projection to the upside. Boom, it's high, it's ready, it's working, okay? All right? You see now? So anytime the price goes from one, okay, trend line to the next trend line, we want to look for a reversal. The reversal will occur on the edge of one of those lines or near the median line of a channel. So anytime you see two lines like this, you see now I have another two lines here. Don't forget that. Always remember, whenever you see two trend lines like this, always ask, where is the median line? Where is the median line? Always ask that question. Even if you don't want to draw it, always know, don't let it click all the time, all right? Whenever you see two lines like this, trend line like this, parallel, know where is the median line. Always, always. Don't miss that. Work on it so your mind can ask that question each time. So, the reversal very often will take place on the edge when the common sector line is kaput. So in order to improve okay, your reversal trading on the edge, doesn't mean that when the price reaches okay, that zone, definitely will have a reversal. Another way you can improve your reversal trading is to look at the candlestick pattern. So last time I was talking about price structure. Remember this when we are talking about the price structure, the architecture of the price. We are talking about area wave patterns. You need to understand that. But then we talk also about candlestick pattern. Those are two different things. Candlestick pattern, price structure. Those are two different things. So at a reversal point, we want to check the candlestick pattern. Look at that. So I've been talking about candlestick pattern trading at Day Pro Traders YouTube channel. Look at this. This is very interesting to me because this is a tall bullish candlestick. I was using this before as for day trading on the hourly time frame. You see a tall. So all I was doing, I was measuring the size of the candlestick. So we know that when we have a high volatility, it usually followed by a low volatility. All right. Now, the volatility allows us also to determine whether the price has a high chance to go down or to go up. So after a high volatility, low volatility, possible reversal. So look at this one. Tall candlestick bar, a small size candlestick bar, not in the void, not anywhere else, all right, but at a specific price on the edge of the projection of the half of the channel. That's what you want to do. So don't use the candlestick pattern in a void. Always ask. So what I was saying to traders, to help traders, that whenever you hear the word pattern, think of what? Location. Where does the pattern form? So now we on the edge. Now we see a tall candle for a small one. All right. Now we see here, look at that. Okay. You remember that video at dayprotrader.com? Long shadow piercing through a key level or a trend line, a common support and resistance level, or a hidden support and resistance level. Look, this is a long shadow piercing through, okay, that projected channel. Check it out. There's a video at dayprotrader.com. Pew. Not only that, look at the second. So the first candlestick came down after piercing through that. This is a typical candlestick pattern, a long shadow piercing through a resistance level. And it became bearish. Now, the second candlestick bar here is very bearish candlestick bar, this one. Quite volatile and very bearish. What has happened here, they probably tried to go back up, to retest. So break below. And this one, as he opened here, he went back up to retest, where he was met by a sell orders. And now it closed bearish. And not only that, the size of this candle is quite small. That's what we want. We want it to be small. The body is quite small, which is good. And the fall, now we have a bearish candlestick pattern on the edge. Now we are almost near the median. We are now below. Am I making sense? We are now below the median line of this channel. You remember here? Now we are now below the median line, which is good. It closed nicely below the median line. And now this candlestick bar, he opened here. He tried again to retest. Quite volatile session here. But finally, they push it down. You see this candle, see why it was so bearish? Oh, the candlestick pattern trader acknowledge that they should sell. All right. Reversal traders saw it happening on the edge of the projected channel. All right. Probably area wave traders counting waves or the wave structure. I'm talking about the price structure here. This is quite interesting. Now I'm talking about the candlestick pattern on the edge. Now we are talking about the price structure. So here we see clearly a price structure. This is a minimum price move, is free. So look here, as what has happened here, the price breaks above that orange trend line. Look. And then he pulled back to retest it. This is an invitation to buy. Will you agree? Okay, so trader responded and bought it. As the price going up, look how the price went up to retest the top. This is the median line. Let's remove that median line. The top of our projected channel, because this is the channel that we were projecting up in the direction of the price. So as the price breaks above, okay, the channel, while we just copy it, this size, and project it up, drawing a line that is parallel. It goes above, we do again the same thing. All right. So now as it so breaks above, retest, invitation to buy. Now as it's going up, look what it did from the orange line to the next level. Watch it, my friend. This is 1, 2, 3. Minimum price move is free. We draw the line on the edge. Priority to bearish signal below, priority to bullish signal above. Here it is, it's coming down. Did you see that? Look again, look my friend, talking about the price structure and the market geometry. Look at this one. 1, will you say 1? Price goes down in a straight line. He rallied up to retest the orange line. Now look what he did. He pulled back again to this level. What's this? Minimum price move is free. And that minimum price move is free. It's not happening anywhere. It's happening on the edge of this orange trend line. This is an invitation to buy. So again, right here, you will draw your line. So you say possible reversal here. 1, 2, 3 on the edge of a channel. Implement a top-down trading method, different time frame trading method. You will be buying like those who bought in this month here. So now he breaks below that line and retests it, and people sold it, and he found a support. But one more thing, as I'm talking about first step to a profitable reversal trading, we are talking about market geometry and the minimum price move is free. We are also talking about the price structure and the candlestick pattern. So one more time, my friend, let's remove some of my line because I want you to understand this. As always, when you learn something new for the first time, you want to, okay, practice, use a demo account until you master it, okay? You are in charge of the training all the time. You are, okay? You are, okay? Now, look again, my friend. So there was a reverse on the edge of that projected channel, yes or no? Commentator is kaput. Look at the price structure and look at the candlestick pattern. Here, look, as the price going down, this is a reversal after an up move, all right, on the edge, all right. Now, the price start going down, we want to talk about reversal at the end of a downtrend. So again, you can see that the channel that we have drawn are still in place. Let's use this time, project our channel. So price came out of, you see the channel here, between the orange and the blue line. We project it down. We'll draw a line that is parallel to the orange line. So if you like, for instance, because traders use the RSI, the stochastic, the momentum oscillator for reversal, but that's not their purpose. That's not their purpose. The momentum oscillators, their objective are different, okay? For instance, the stochastic, the number one role of the stochastic is to pinpoint bearish and bullish divergences. That's their objective, is not to pinpoint reversal. But a lot of traders use the stochastic to pinpoint reversal. If you want to use the stochastic or the RSI for reversal trading purposes, you must always combine them with the market geometry, candlestick pattern, and the price structure. Let me say this again. If you want to use the stochastic indicator, the RSI indicator for reversal trading purposes, you must combine those technical indicators with the market geometry, the candlestick pattern, and the price structure. Am I making sense? So now, as you can see, the price going down, going down, going down. So first channel up here, second channel here, and so on. That channel, because the price ride it up, now it's coming down. We don't have to draw a different channel. We just leave those channel in place. All right? And now here it is coming down. As it breaks below, okay, the orange line, we project it down. Yes or no? We measure this one here, and we project it down. You are looking for reversal. What have I said? Anytime we see two lines, we don't want to forget the median line, because the reversal can also take place near the median line. Let's divide this channel, our last channel, this channel, into two. You see that the reversal has taken place on the edge of the median line of the last channel here, this smaller channel here, near the median line. One more thing, as I was telling you at the beginning of the video, that we want, in order to, the first step to profitable reversal trading, all right, we want to use market geometry, price structure, all right, candlestick pattern, and also divergences. Here, look at my RSI period 14. It does a very good job here. You can see that the RSI was bearish. Look at the red line, bearish. At that time, the price was going up. This is a beautiful divergence, by the way. So the RSI was indicating to us, was giving us early warning that this move up is not true, that there is a high chance that we may see a reversal. So professional traders, as always, whenever they see a divergence, they say, well, a warning is now given to us that there will be a reversal, but reversal, we will prefer it to happen on the edge. I hear you, you said it, on the edge. That's it, on the edge. All right? So you see the divergence, acknowledge the divergence. Now ask the next question. Where do we usually have, okay, the reversal? On the edge. Project your channel and watch the reaction of the price on the edge. A divergence is a warning. We usually see false divergences during the third Elliott wave. Don't forget that. Also during the first Elliott wave. All right? False divergences. So it's not all divergences that are true. But this is a good one. So therefore it's telling us divergence. But not only that, look, the price breaks above the orange line, he tests it and go 1, 2, 3. Minimum price move is free, bearish divergence is in place, common centralized kaput, candlestick pattern confirming to us, price structure confirming to us, a reversal is likely to happen here. All right? Well, I don't want this video to be too long. I think I've said enough so far about first step to a profitable reversal trading, because I know that a lot of traders like to trade reversals. Now the question is, where does a reversal occur? A reversal occur at the end of an uptrend or at the end of a downtrend. One example, one pattern at the end of an uptrend is the head and shoulder chart pattern, when the price failed to form a new higher high after a higher low. It's telling us that the bullish momentum is diminishing. In a downtrend, we often see the inverted head and shoulder chart pattern, when the price failed to form a new lower low after a lower high. All right? So those two chart patterns can help us also to trade reversal. Apart from the chart patterns, we can also use, all right, market geometry. All right, market geometry, the projection of a channel as I demonstrate to you here. Okay, we use a market geometry. Hold on, please. I'm trying to write something here. All right. And we also use a candlestick pattern. Candlestick pattern. All right. Apart from the candlestick pattern, we also use what we call the price structure. Minimum price move is free. So, talking about minimum price move is free, that will help us to improve our reversal trading. We also use divergences. So a combination of a divergence, a bearish divergence, the price structure, and the candlestick pattern will allow us to pinpoint the best reversal point on the edge. Always use market geometry. You'll be surprised. We can project an horizontal channel, a rising channel, a declining channel. We can project even a triangle. All right? So be a bit creative when it comes to the projection of a channel. All right? And as you are using the market geometry, you want to concentrate on the price structure, how the price is going down, to reach those key level that you have drawn on your chart using market geometry. So now you see, so breakable retest. How is it going up to retest the next key level? You want to monitor it. So now, if you see a bearish candlestick pattern at a reversal point, what is the next step? You must use different time frames trading method. I did not say you may, no, you must. I did not say you ought, no, you must. All right, different time frame trading method. All right. So this is the end of the tutorial about the first step to a profitable reversal trading. If you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about first step to a profitable reversal trading. One more time, Happy New Year 2017 to you, and speak to you soon.